In today's episode, we are going to analyze the performance of one of the leading life insurance companies in the country, Union Assurance PLC. So starting off, if we look at Union Assurance and its journey over the last 4 decades, the company was established in 1987 as Sri Lanka's first private sector insurer. In 1988, it becomes a listed company in the Colombo Stock Exchange. By 2009, John Keells Holdings plc had gained an 81% stake in the company, and in 2015, the company divides its operations into two segments as life and non-life businesses and divests 78% of the non-life business to Fairfax Asia Limited. This move allows Union Assurance to focus on its core operation, which is their life insurance business. In 2018, Union Assurance achieves a significant milestone where Forbes Asia ranks the company in the best under a billion list. And starting from 2020 onwards, the company embarks on a journey to digitization where they introduce several innovative digital solutions and processes to the insurance industry. So these initiatives strengthens US position as a digital first insurer. And in 2024, the company surpasses 100 billion rupees in total assets, and in 2025 the company divests the remaining 22% stake in Fairfax Insurance. So as of 2025, the company is 90% owned by John Keells Holdings plc, has 95 branches island-wide, has 800 plus employees, 3,000 plus field staff, and has protected 340,000 plus lives through its products and services. So the company operates with the vision of empowering human progress by protecting what matters. And it does so with the mission of achieving national advancement through making life insurance accessible across the island and offering comprehensive and personalized solutions for every stage of life. So how they're able to achieve this is through their comprehensive suite of products designed to meet customers' evolving needs. Their product portfolio consists of several categories of insurance products, including health, education, retirement, protection, investment, and group life. So the question is, what is the strategy of UA and what does it entail in terms of its competitive approach? The strategy of the company is that it is focused on becoming Sri Lanka's most innovative and trusted life insurer by leveraging digital transformation, customer-centric innovation, and sustainable value creation. This is the key focus of their strategy. So it does so by focusing on 5 key pillars, that is optimizing their sales channel, operational transformation, putting their people first, being a purpose-driven brand, and providing products that add value to their customers over time. So if we talk about the business model of Union Assurance, it is designed to deliver long-term financial security for policyholders while creating sustainable value for their shareholders. So their value chain is formed to deliver just that. So let's go through the steps of the value chain at Union Assurance. It begins with product design and development, where the customer needs, regulatory requirements, actuarial insights, and risk considerations are translated into life, health, and protection-related products. These products are distributed through a multi-channel sales network comprising of branches, agents, bank assurance partners, digital platforms to reach the diverse customer segments. Once policies are issued, policy administrations and premium collection happens, where the company ensures efficient onboarding, accurate record keeping, and stable cash inflows. Fund management plays a critical role in the value chain as well, because this is where the premiums are collected and are invested to meet the long-term obligations within defined risk and regulatory boundaries. So supporting this are the physical and the digital infrastructure functions that maintains that seamless organizational operations. So the value chain concludes with claims management and customer service. So here the timely and fair settlements are important to reinforce that trust and the strength in the brand of the credibility. So if we evaluate the macro environment and what affects Union Assurance, we can see how most aspects of the external environment affects the company and its strategy. So starting with the political factors, Sri Lanka's political environment continues to be shaped by the evolving governance priorities, which influences businesses' decision making. In the context of UA, we see these factors not impacting the company significantly. Economic factor-wise, robust economic activity, rising disposable income levels are going to stimulate greater demand for life insurance solutions. This environment supports the introduction of competitive and innovative product offerings. If we look at social aspect wise, Sri Lanka's life insurance market is being reshaped by notable social developments, which are influencing how insurers design and deliver their products and services. So, demographic shifts, particularly the expanding aging population, are going to drive increased demand for retirement focused and health linked insurance solutions. And at the same time, evolving lifestyles, rising health awareness, they're going to create that need for more flexible, personalized, and customer centric policy offerings. So, we say that social factors are going to play a significant impact on the strategy of the company. If you look at technological aspects, the increasing penetration of the mobile services and improved internet connectivity is going to expand that access to insurance services across Sri Lanka. So the industry is being transformed by the adoption of advanced technologies such as predictive analytics, artificial intelligence, machine learning, chatbots, and the emergence of insurtech and fintech solutions. So this is also going to have a significant impact on the strategy of the business. If you look at environmental aspect wise, a rise in natural hazards and extreme weather events are intensifying the demand for disaster related products. So legal aspect wise, Sri Lanka's insurance regulatory landscape is driven by that increased directions issued by the Insurance Regulatory Commission of Sri Lanka and also by the requirements introduced by the Central Bank of Sri Lanka. So if we evaluate the internal environment of the business, starting off with the strengths, we see the financial strength of the business, the brand visibility, the reputation, and the position the company holds in the industry as a disruptor through their market leading innovations can be noted here. In terms of weaknesses, we see their high investment in digital transformation, their reliance on their agency distribution, highly regulated industry they operate in. These can be noted as weaknesses. And then in terms of opportunities, we see the growing insurance penetration in Sri Lanka and the demand for health and protection products, and AI and advanced analytics can be noted. In terms of threats, we see the intense competition, the economic uncertainty, the regulatory changes, and the changing customer expectations. So if we look at the resources and the capabilities of Union Assurance, we can quote financial resources as one key element here. The financial strength of the company with their 127 billion rupees in total assets, 93 billion rupees in life fund, their 108 billion rupees assets under management, all of which are enabling their investments in growth, technology, and product innovation. In terms of human resources, their skilled workforce and their experienced professionals and their over 3,000 field staff and their 8,000 plus skilled workforce can be noted here. In terms of physical resources, the company operates 95 branches across Sri Lanka, that is providing that nationwide customer accessibility and supporting its multi-channel distribution strategy. In terms of technological resources, they have many advanced information systems in place, like the digital integration that they have in their bank assurance arm. They have digitized their customer onboarding process, their digital agent lifecycle management system. They have introduced a financial underwriting automation system, AI-driven wellness and nutrition tracking. They have gamified their customer engagement, all of which are a few to be named that is supporting the business's digital transformation capabilities. In terms of intellectual properties and their resources, we can talk about the Union Assurance brand reputation and their diverse product portfolio. In terms of product innovation capability, we see that with how the business is continuously developing innovative insurance products that are tailored to the changing customer needs. In terms of distribution capabilities, Union Assurance is effectively combining their agency, bank assurance, branch networks, and their digital platforms together to reach the customers across Sri Lanka, and that is increasing their market penetration and their accessibilities. So looking at the business model and the action that is being taken by the business, we see the company following a differentiation strategy where Union Assurance through their actions is setting themselves apart from the competition. After all, differentiation strategy is about being better at what you do, but it's a matter of being different at what you do. So how does UA does this? By trying to create differentiating attributes through the value chain of the company. So the unique drivers the company has been focusing on to create a differentiation advantage are the innovative product development and their digital innovation leadership which they have, which has been able to create that value that competitors may not easily replicate. Also, the company prioritizes operational excellence. For example, 94% achievement on one-day claim settlement. They have a strong collaborative supplier partnership, all of which are contributing to achieving that operational excellence, which is giving that advantage in their differentiation strategy. And also the focus on employee training, skill, and experience, where the company has recently introduced a new employee value proposition named Going Beyond Limits. They have maintained their diversity. They've invested heavily on their learning and development, all of which are focused on their employees' training, skills, and their experience. So it is seen that the company spots opportunities to gain profitable market share by relentlessly building competitive advantage and applying resources where the rivals are able to least defend themselves. This means the company is achieving its strategies by its offensive competitive moves. So for this, the company is seen using its strongest competitive assets, such as their digitization strategy, where new innovations are introduced to the insurance industry of the country, and their continuous product development, where the company has been introducing unique life insurance solutions different to what the competitors are providing to the customers. Moreover, we can see UA with these initiatives has been able to leapfrog their competitors by being first to the market in most areas of their business. So looking at the financial results, the organizational performance together, we can see the success of their overall strategy. Equity-wise, we can see the company has a strong equity base exceeding 23 billion rupees, which is supporting the future growth of the company. Assets under management is currently at 108 billion rupees. That is providing that stable investment income and the long-term sustainability the company needs. Approximately 127 billion rupees in total assets in the company is demonstrating that significant scale the company has within Sri Lanka's life insurance industry, which is a significant achievement in itself. Then their return on equity is at 24%, and it's significantly above that average expected return in Sri Lanka's insurance industry, which is roughly around 15 to 20%, and it's demonstrating that efficient utilization of their shareholders' funds and that strong value creation. With a net profit margin at 19%, it is showing that Union Assurance has demonstrated excellent profitability during 2025, and it's reflecting that effective expense management, healthy underwriting margins, and strong investment income is achieved despite the higher claims they have experienced during last year. The current ratio is at 1.25, and that shows the liquidity remains strong due to the company's prudent investment management and high quality liquid assets. The capital adequacy ratio is at 215%. Now this exceeds the regulatory minimum by a considerable margin, and that demonstrates that excellent financial strength and the ability to absorb that unexpected losses of the company. Their earnings per share is at 5.27 rupees, that is reflecting a higher profitability and increased shareholder return. And their PE ratio is at 13.52, which is showing that investors are continuing to value Union Assurance positively due to the consistent earning growths and their strong market position. So I think you were able to have a comprehensive understanding about the strategy and its execution of the company we have selected, Union Assurance PLC. So we'll see you again next week with another similar analysis of a leading company in Sri Lanka. Good day to you.